Imagine waking up one morning and finding out that one Wall Street move just quietly changed the future of one of America's biggest tech companies, and almost nobody is talking about it yet. This isn't hype, this isn't a rumor, and it's not a meme stock story. A top investment bank just made a move that could signal where the next big wave in AI stocks is heading, and if you blink, you might miss it. Because while everyone is focused on Nvidia headlines, something very interesting is happening behind the scenes with AMD, and it could reshape how the AI chip war plays out over the next few years. So before you scroll away, give me a few minutes, because by the end of this video, you'll understand why analysts are suddenly getting more confident in AMD, what changed, and what this could mean for the future of AI investing. Now let's slow down and break this story apart, step by step. Advanced Micro Devices, better known as AMD, has always lived in a strange position in the market. It's never been the loudest name, it's never been the most hyped stock, and yet, again and again, it quietly shows up and competes with giants. Over the last decade, AMD went from being seen as an underdog to becoming a serious competitor in CPUs, data centers, gaming, and now, artificial intelligence. But here's the key thing. For a long time, Wall Street didn't fully price AMD as an AI powerhouse. Nvidia dominated that narrative. Nvidia became almost synonymous with AI chips. Investors piled in, valuations exploded, and Nvidia became the clear market favorite. AMD, it was respected, but not celebrated. That's why this latest move from Mizuho Securities matters so much. Mizuho is not a hype-driven firm. They don't chase trends for clicks. When they raise a price target, it's usually because something fundamental has changed. And recently, Mizuho boosted AMD's price target, not because of vague optimism, but because of concrete developments in AI demand and AMD's growing role in that ecosystem. One of the biggest reasons behind this shift is AMD's deepening relationship with OpenAI. Yes, that OpenAI, the company behind ChatGPT. OpenAI is scaling at an insane pace, training large language models, running inference, powering enterprise tools. All of that requires massive amounts of compute. For years, Nvidia was the default option. But now, OpenAI is diversifying its chip supply, and AMD is stepping into a much bigger role than many investors expected. This isn't just a small pilot project. Analysts see this as a multi-year opportunity that could drive billions in revenue. When an AI leader like OpenAI starts leaning more heavily on your hardware, Wall Street pays attention. And that's exactly what happened. Mizuho now believes that AMD's AI accelerators, especially its MI300 series, could see much stronger adoption than previously expected. These chips are designed specifically for high-performance AI workloads, training large models, handling massive datasets, and competing directly with Nvidia's offerings. But the story doesn't stop at just one customer. What really changed the narrative is the broader demand signal. AI spending isn't slowing down. Enterprises, cloud providers, governments, everyone is racing to build AI infrastructure. And that means demand for chips is not only growing, it's diversifying. Companies don't want to rely on a single supplier forever. AMD is positioning itself as the strongest alternative. From an investor's perspective, this matters because competition creates opportunity. If AMD captures even a fraction of the AI market Nvidia currently dominates, the revenue impact could be enormous. Mizuho's updated outlook reflects that possibility. They now see AMD benefiting from stronger margins, higher data center revenue, and accelerating AI adoption over the next few years. That's why they raised their price target, not based on speculation, but on changing fundamentals. Now let's be clear about something. A higher price target does not mean the stock will instantly go up. Markets don't work that way. Stocks move based on expectations, earnings, sentiment, and macro conditions. But price target increases do signal confidence. They tell us that analysts believe the company's future cash flows and growth potential look better than before. And when that confidence starts stacking up across Wall Street, it often changes how institutions position themselves. Another important angle here is valuation. Compared to Nvidia, AMD still trades at a more reasonable multiple. That doesn't mean it's cheap, but it does mean expectations are different. Nvidia is priced for near perfection. AMD is priced for growth with execution risk. For many investors, that's attractive, because if AMD executes well, the upside could be significant. And if AI demand keeps accelerating, which current data suggests it will, then companies supplying the infrastructure stand to benefit the most. This is also why the AMD story is not just about chips, it's about strategy. AMD has been investing heavily in software, ecosystems, and partnerships. AI hardware alone isn't enough. Developers need tools, companies need integration, cloud providers need flexibility. AMD knows this. And that's why partnerships like the one with OpenAI matter so much. They validate AMD's technology and show that its solutions can operate at the highest level of AI development. Another thing many people overlook is timing. We are still early in the AI infrastructure build-out. This isn't a one-year cycle. This is a decade-long transformation. Data centers are being redesigned, power usage is being optimized, entire industries are restructuring around AI capabilities. In that kind of environment, second-place players can still win big. AMD doesn't need to beat NVIDIA outright to succeed. It just needs to capture enough market share to justify higher revenue growth and stronger margins. That's the bet analysts like Mizuho are starting to make. Of course, risks still exist. Competition is fierce. Execution matters. Supply chains matter. And tech cycles can shift quickly. If AMD fails to deliver on performance, or if customers delay spending, expectations could change. That's why smart investors don't blindly follow upgrades. They watch earnings. They track guidance. They monitor adoption. But what's undeniable is this. The story around AMD is changing. It's no longer just a CPU company. It's no longer just a cheaper alternative. It's increasingly being viewed as a serious AI infrastructure player, and Wall Street is starting to reflect that shift. So if you're watching the AI space, this is one of those moments worth paying attention to, not because it guarantees profits, but because it signals where institutional thinking is moving. The market doesn't always reward the loudest story first. Sometimes it rewards the company that quietly positions itself while everyone else is distracted. And right now, AMD is doing exactly that.
Before you leave, remember this one thing. Big moves in the market often start with subtle signals. Analyst upgrades, strategic partnerships, shifting narratives. By the time everyone agrees, most of the upside is already gone. Staying informed is the real edge. If you want more breakdowns like this, no hype, no noise, just clear explanations of what's actually happening in the market, make sure you stick around. Now, as promised, here's the disclaimer to include at the end of the video. This video is for educational and informational purposes only. It is not financial advice. I am not a financial advisor. Investing involves risk, and you should always do your own research or consult with a qualified financial professional before making any investment decisions.